Okay, this is the Orderflows trade review for Friday, April 8, 2016. My name is Michael Baltos. I'm the founder of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, the first market I want to talk about today was the bond market, the ZB, the June contract. This is a 4-range chart. The bonds had been under pressure all day, and you're seeing, as the market's selling off, you're going to see multiple divergences. You have one here, you have one here, you have one here. Now, if you're going to be trading divergences, you want to find, divergences that are going to work. You don't want to just be trading a divergence simply because there's a divergence. You need some other confirmation, to tell you to buy if it's a buying divergence, or sell if it's a selling divergence. And, just like I said, the divergence by itself is not enough. What I do is I look towards the ratios, and I can see these are black numbers, which to me are just normal numbers in the market. The market's doing what it's supposed to do. It's facilitating trade, and the market just keeps going lower. On a trending day, you're going to get divergences, and oftentimes you're going to get divergences with without success. What I mean is it's going to be a divergence and it's going to pop up a bit and then come off and make a new low. You want to find the divergence when it's got something more going for it rather than just the divergence, and that's what I use the ratios for. Now you have these divergences. We make new lows. Just after 10 we made this new low here at 165.25. There's no divergence. You still have the negative delta. You don't have a number in the ratio that you like, but you're starting to see in the next bar a ratio. You got a single print here, a single print here, so you're getting 165.75, and it's indicating to you now that there's at least a sign that even though you don't have the divergence here, you're having a sign that prices below this down here at this low, prices are starting to move away, and the lower levels are being rejected. You're seeing the delta start to build up, 325, 400, as you're getting these ratios, 165 and 75, and what happens? The market starts to move up. Okay, we come back up to this area here, this we call it this sort of swing high at 168.10. You have a single print, and the market starts to come back off again. You get one single print. Yeah, you're met with this one bar here. That's a green candle, and you do have, again, a ratio that you like. But you're going, you have to constantly think, okay, what happened here? We just went up from this low to this swing high, and we're starting to come back down. Just because you have one bar here doesn't mean that the structure that you're seeing earlier is going to fail. If anything, when I see a bearish signal followed by a bullish signal immediately after it, I tend to feel that the market is just going to go sideways on me, and it does for the most part. You get a couple more bearish signals here, and the market just goes sideways. Then we come up here to this new high at 166.12, and we start to come off. We got the delta scalper kicking in, telling you to get short, and what happens? The market drops from the 166.06 level down to 165.28. So there was a decent signal there that you could take to trade. And at this time already, it's coming into the 2 o'clock period. So I'm not one that wants to really start to trade it after 2 o'clock. But this right here was really the only legitimate trade that you could have taken. You could make the argument here. As you're starting to move away from the low, you got a couple of ratios. You've got positive delta. I'd much rather have the positive delta on the bar right on the low, but you can only take what the market's giving you and make your decision off that. It's iffy if I would have taken this trade. I wasn't trading this morning, but looking back on my charts, I'm about 70% that I would not take the trade. But if I had a divergence here followed by this single print here, I would have taken it for sure. But this delta scalper, this one is, to me, is a legitimate setup. Even if you don't take it initially off this bar, you wait for this next bar, you got a ratio that you like, and you could get your 5-6 points out of the market just like that. So it was there was at least one solid trade there, if not two, in the bonds this morning. Okay, so for the next chart I'm going to look at here is the EMini. This is a 10 range chart. Again, why do I look at range charts over minute charts? I do watch minute charts during the day, but I base most of my trading on range charts because I like to see how price moves from from a level to another level rather than waiting for the time to end and say, okay, it's time to form another chart, another bar. So this is a 10 range chart, and 746, we just completed this bar here. You have a divergence, you have a ratio. That's what I like to see. I like to see the divergence. I like to see the blue number above the bar if it's a red candle, or if it was a green candle, it'd be below the bar. The market did come back up to within a tick of that high, and then then started to move downwards. Now, this is a setup that I talk about quite often. You can on the website there's a PDF you can download. It talks about the O2X. This is the O. You pull back to within 2 ticks. This one came back to within 1 tick, and then your X is down here. So this is a setup that appears time and time again in the markets where you have your high. You have your reason to be selling it on the high. You have a ratio. You have a divergence. You throw an offer up here. Within 1 or 2 ticks of this high, you look for that pullback up to that level. Here, at 2 ticks, you're talking 20.52.5. Is your entry price. And what happened? The market came back up, hit it, and then immediately sold down. Down to 20.46. So you're talking at least 5 points out of that move. Okay, now, so we came down into this area here at 840, and you got a ratio here. Okay, it's on the back of 2 ratios right here. So, what's different about this is you have the stack buying imbalance here, 1, 2, 3. Okay, now this is something that I would normally be looking for to hold as support. Okay, now I always talk about taking things in context in the market, and what you have here, your high is right here at 53, and you got a buying imbalance. Somewhere down, just off your high, it's still a good 5 points away off your high, so there's still a capacity for the market to go higher. But for me, I'd rather take a selling imbalance up somewhere near the high than a buying imbalance. But I mean that's me. If you're a different type of trader, you may not care about that. And I like to get in somewhere in the zone, this green zone, because it's a buying imbalance, so it'll appear in here. So this is your entry price. So you're looking to get in around the 48 level. Where's your stop going to be? It's going to be just worst case scenario stop is just going to be down here below, below the low of this bar. I mean, realistically, you should be watching, but be careful when you get the point of control towards the bottom. I mean, that's going to be also a support level for you. If we start spending time below this point of control, watch out. But what happened? This market came right down to that point of control. We breached it by a tick, came down again, hit it, right to the tick, and moved back up. So, this is not necessarily a trade that I like to take, instead of buying imbalance towards the high. I said I'd much rather take a selling imbalance, but that's just me. I know people, they don't care. They're happy to take buying imbalances wherever they appear. This one you have a ratio, in the bar as well, so it's telling you that prices down here are being rejected. So, if you're taking that, you're getting long somewhere around the 48 level. Your stop is around down here at 45.5. So, you're risking 2.5 points, trying to get a good 5 points. And what happens, as luck would have it, this one worked out, like I said, this point of control also held as your support level. We tested it twice and we came down. First time got through it by a tick. Second time got it right to the tick, and then the buying just took off and went up and actually made a new high. Now for me, again with these buying imbalances, I said I know some people, they just buy them blindly, which is fine. You can, but for me, I like to get in the zone. I draw out the zone 1, 2, 3, 4, 5 bars out. You could adjust it in the software. But for me as well, what I find is the more time you spend inside, trading around this green area, sort of the less powerful it is. So I mean, honestly, if I was in this trade, which I wasn't, but if I was, and I see, we got a red candle immediately after I get in, and okay, it pops back up, comes back down, probably in this candle, I'd probably be looking to scratch it, or maybe take a half a point out of it. In this case, it did work out, but generally, I find the longer you spend in it, the less effective it is. And so we popped up to this new high. You have a divergence, but you don't have a ratio. And then we started selling off. And, I'm just, you have a ratio here, a ratio here, a ratio here. And, just basically trading sideways, this good part of the afternoon. You're not seeing many blue numbers. So there's not many blue ratio numbers telling you that selling has been drying up, or that buying has been drying up, or there's some stopping volume. Like again, you have one here. That's the first one out of all this area in there. And one by itself isn't necessarily going to be telling you much. When you start to string them together, it's important. We came back down towards the close, towards the opening price for the day, and we settled. Just we bounced off of that. There wasn't very much in there. There was one nice trade today, and that was that high, that divergence, with the ratio, back here. That was the nice trade. It's debatable. This is not that type of, this trade did work out, but it's not one that I'm inclined to take. With the imbalance just sort of, off the high and, sort of in the middle of an area again. I said if it's a selling imbalance where we're coming off the high, I'd be inclined to take it, but not as it is here. I put it in there just because I know some people really like to trade buying imbalances, stack buying imbalances and stack selling imbalances, and I just want to give my 2 cents towards it. I think that the longer you get trading around that area, sort of the less effective it is. But as you see, that didn't matter in this case, and the market just went straight up as we got towards the end of that, of this green zone. And one thing I just want to talk about real quick as well is when you're making highs, right, or lows, and you're seeing, like you see here, you see this high with this massive negative delta. I'll say massive. It's pretty big, 4,000 on a 10-range chart. Usually you're getting deltas, 2,000, 1,000 or less. Here you got 4,000. Then the next bar you got 4,000. So there's strong selling coming in. The delta alone could be telling you to be getting short by itself. If because what you happen here, right? The market's going up. You're getting this last push up to the high to see if these, people are buying it, to see if they could attract more people into the market to make the market go higher. And but what's happening is the delta is drying up. It's 558, 1647. Then you get up here, you're getting strong selling coming in. In the sense of hitting the bids. There's strong offers here: 3,000, 2,000, 3,000, 3,000, 5,000. Strong numbers being traded there. As it starts to come off, people are supporting the market. You got 9,000, 8,000, 4,000. Down here you got 12,000, 10,000. But sellers have taken over. They're overrunning the buyers. And you see, these two bars here with nearly negative 10,000 delta. I mean, it's 9,000, basically 4,300, 4,800. And the market just comes right off. These are the signs. This is what order flow can tell you. If you're just looking at a normal bar chart, you're not going to see that. But if you're looking at a order flows chart, and you're paying attention to what's happening in the market. Early in this bar, it had a positive delta of 2,300 as you're making the new high. But what happens is it ended up down, minus 4,300. The most it was negative was minus 4,331. So it's only one lot off. It ended on a very, very, very negative note. It ended as extreme as in terms of delta. In terms of negative delta, they're just telling you the sellers have taken control. Now this market has gone from a demand-driven market to a supply-driven market. And if you're getting short, you're getting short somewhere around this 49.50 level, and gosh, that was a nice move. It was down to the 40.41 level, and even lower. And I said I'm not one that's going to hold it on. I would have been looking at this nice move down here, down to this 41 area, but it's a nice 8-point move as well. That's something that's you'll pick up over time when you're trading more and more with order flow, is reading the delta. But delta is very important in trading. Okay, so thanks for watching this video. Again, to learn more about trading with order flow and the software I use in this video, be sure to visit my website www.orderflows.com and sign up for my newsletter. Subscribe to our YouTube channel. I'm on Twitter, everything. It's amazing what order flows can do for a struggling trader. Now, if you're a trader that's just coming in to look for, the new shiny object that's just you think is going to turn the market into an ATM machine for you, order flows is probably not for you. If you're willing to spend the time to sit down and learn how to trade, then yeah, order flows will transform your trading immensely, beyond words. I can't describe it. So, again, visit my website, www.orderflows.com, or shoot me an email at mike@orderflows.com. Thanks.